Guten Tag, Ni Hao, Privet everyone, wherever you are. I'm Shirley, strategist currently based in Singapore, and today I'll be guiding you through our global FX outlook for October 2024. Before we begin, I'd like to emphasize that this presentation is for informational purposes only and does not constitute investment advice. September 2024 saw significant market movements. Two key factors stood out in the data. First, market data shows that the Fed implemented a 50 bips rate cut. Following this decision, US equity indices, including the Dow Jones and S&P 500, reached new levels. Concurrently, the US dollar experienced downward pressure. Second, Chinese authorities announced various economic measures, including interest rate adjustments and policies announcing increased bank lending. Subsequently, Chinese equity markets have their strongest week ever since 2008, and data also indicated shifts in global risk sentiment, with several currencies moving against the dollar. Following the Fed's rate cuts, the dollar index reached its lowest level since July 2023. Current market data indicates expectations of further rate adjustments in upcoming meetings. Businesses with international operations may wish to monitor these developments. In Europe, market data shows the euro touched 14-month highs against the dollar last month, though it predominantly traded within a range. The European Central Bank also adjusted rates, which coincided with changes in the euro's movements. Market data also indicate that the pound reached 31-month highs. This movement coincided with Bank of England communications, suggesting a different approach to rate adjustments compared to the other central banks. Current market pricing indicates varying expectations of rate adjustments across central banks over the next 6 months. The Australian dollar showed strong performance in September, and this coincided with both the Fed's policy shift and China's economic measures. The data shows the Australian dollar moved outside its previous 2024 range of 0.64 to 0.68, reaching its highest levels in 18 months. Economic data releases in most regions have been below consensus expectations. In Europe, particularly in Germany, economic indicators suggest continued challenges in growth momentum. Market data also shows increased expectations of further ECB policy adjustments. Three prominent themes are evident in current market data. First, policy adjustment trends across regions, with most central banks that met in September adjusting rates. Second, economic indicators suggest changes in global growth outlook. And finally, third, recent policy changes in China have coincided with movements in commodity prices and some commodity exporting nations' currencies. The market data now shows significant shifts in interest rate adjustments throughout the year. Early 2024 saw expectations of rapid rate cuts, which were adjusted following above consensus inflation data in Q1. Recent US labor market data preceded the Fed's 50 bips rate cuts. Current market pricing indicates expectations of further rate cuts, about 70 bips for the Fed before year end. These shifts have coincided with movements in currency valuations. Now, looking at the US dollar index, it reached its lowest level since July 2023, following the Fed's rate cuts. Market data show increased volatility in US dollar Mexican peso, with a pair reaching a near 2-year highs. Among G10 currencies, the Japanese yen moved by almost 2% against the dollar last month. The Canadian dollar moved to an 8-month high, surpassing the 1.35 handle, despite market expectations of consecutive Bank of Canada rate adjustments. Looking at the vol analysis, it shows elevated levels for the Mexican peso, though cooling from 4-year highs. The Canadian dollar's volatility is increasing, but remains below its year-to-date average based on historical data. In conclusion, market data indicates significant changes in forex markets corresponding with central bank policy shifts. It's really important for businesses to stay informed about economic indicators and market trends that may impact their operations. Each business situation is unique, and you should really assess how these market conditions relate to your specific circumstances. Thank you, and we'll see you next month. Bye.